Let's bring in Bill Baruch. He's the president of Blue Line Futures. He's joining us to have a look at a few companies he's got his eye on. Bill, welcome. At the top of the show, we looked at the indices, the new all-time highs in the SPX, the NDX, and while the Dow not far off its all-time high, energy stocks, I should say, helping give the indices a lift today. I'm sure you're well aware of that. I know you're dialed in on the move up in crude, but we've looked at that multiple times. We've talked energies. I want to shift our focus to the housing data this morning and how the home builders are getting a lift because to begin the week, some pretty strong numbers. Home sales, new home sales today above consensus, probably also giving investors a sense of a firmer foundation under their feet.
Yeah, you're right. A little firmer foundation there. We're starting to see the home sales pick up just a little bit, but I think it's still in the very early innings there. A lot of these companies have invested a lot of money into construction, and it's starting to show up. But again, it takes a process, 6 to 12 months for it to really start to precipitate into the market. Yeah, it's just a long, I mean, everybody knows lumber costs, but it's not just lumber, it's labor, it's other materials. And last year, really just the supply chain locked up for building that at the time there was a lot of demand. So the market's still working through that, and we're starting to see the light at the end of the tunnel.
Bill, you sound a little skeptical. You sound a little unenthused by these numbers.
Yeah, I think there's better places to be invested. We don't have a ton of exposure in the home builders. We own Pulte. Pulte's underperformed relative to Lennar recently. It's still holding our support levels. What I tell the viewers, if you're looking at investing in this space in single stocks, look for somebody that has good free cash flow. Because a lot of these companies are investing a lot of money into construction right now, and you want to make sure that they have free cash flow, while they're doing that. So with some of the larger names like Horton, Lennar, and Pulte do. Some of the smaller ones may not. So be careful. I think it's a space to have some exposure if you really feel so, and I think it can perform. But there are better places to be invested right now.
Bill, I'm looking at some of these names: Pulte, Lennar, DHI. We're talking DR Horton. I mean, all of them kind of stalled out a little bit earlier this spring amidst that commodities run-up that we had seen. But commodities have backed off since you mentioned the materials and how this had been such an issue for the builders. I mean, ultimately, that is to ease some of the pressures that they were feeling. But I guess, as you mentioned, your time will tell whether these prices will remain lower. Ultimately, some of those pressures will come back. Supply chain continues to be a focal point here as well.
Yeah, and well, Lennar's above the 50-day, and DR Horton is, okay. And it's
hanging in there.
Yeah, hanging in there. So I think Lennar could break out. Kind of keep a pulse on it, something to watch closely, but it's not. I don't think you're missing much if you're not involved.
Okay, I'm looking at 3 DHI, Pulte, and Lennar, and of the 3 majors, it does appear as if poised to break out here first. Well, Lennar has been the strongest as it's working its way back up to those highs. Let's talk cybersecurity, certainly on the minds of investors and traders on the move higher. You've got your eye on CrowdStrike, and talk to us about FEYE, a couple names, a couple stocks you're watching, CRWD as well.
Well, I'll tell you, CrowdStrike, it's sort of a bitter topic for me right now. I have owned the stock. I've made some good money in calls earlier in the year. I was working some lower levels, more closer to that 200-day moving average in the stock, and I didn't get it before this move. There was, I thought, a lot of support into 220. We didn't quite get there. What was it, the middle part of last week, where the low was 227, and I just didn't think the market overall was going to turn as sharp as it was, and then look at this, it's up almost, or it probably is up at 10% right now. So it's a little bit of a bitter topic for me. I want to own the stock, but I want to own it at the right levels. It's an expensive stock, so I think you'll find it higher in years to come, but it definitely could be one to have quite a bit of volatility to the downside if the broader market does so as well.
Bill, you mentioned the move up off of the low last week. You missed 227. Look at this run up here again, up to 269 today. Currently 267 and change right now. We're talking up 8.75% on the day with the gap higher. Talk to us about FireEye, ticker symbol FEYE.
Yeah, that's broken down about a week and a half ago, and you got the 50-day moving average now about to cross the 200. I'd avoid the name in general, and there's a lot of companies in the space that could do well, and there's a lot of companies that have just done well only because of the ongoing narrative. So I think you got to be selective. and CrowdStrike was one that I wanted to own. I mean, and there's spots within in the area in the sector in the industry that that doesn't have to be just total cybersecurity, but there's ones with government contracts and things as well. So do your homework. There are some good names out there.
Okay, speaking of some good names, lastly, Dick's into new record highs ahead of earnings. There's certainly a lot of focus on retail. That's going to continue this week, as it looks like as well. Talk to us about DKS. I'm looking at EPS expected at $2.67. We're talking revenue of $2.81 billion. Where do you stand on this one, Bill?
It's moved higher. I don't own it. I don't have a lot in this direct retail space. I mean, actually, I own Kohl's and I have Target and we own FDIS is a consumer discretionary ETF to get some decent exposure. Mostly Amazon, but it's sort of I don't love Amazon right now, so it's a way to have some exposure there. But Best Buy was leading the way higher here. The retail consumer is alive and well. I mean, look back at the numbers last week. They didn't really impress headline-wise, but if you look at the year-over-year, the July numbers were strong. I think it was something like 17, 15% year-over-year, and same thing with June as well. And you're talking about year-over-year with base comparisons that were positive last year in 2020. So these are not comparisons off of 5 or 10% drop in 2020. So I think the consumers there, consumers are bellwether within the economy. I wouldn't be chasing Dick's. I wouldn't be chasing Best Buy, but they continue to move higher. I own some other companies in the space.
Okay.